So warm welcome to your students. Hope you have revised what we have done in the last class. Now, as I have explained you in yesterday's class that we are going to consider the next model of the goodwill, that is goodwill valued. Okay. So today we are going to see how to solve the problem when goodwill is valued. All the other adjustments will be same dear, like appreciation, depreciation, capital brought, everything will be same. Only focus must be on the goodwill, how it is. So depending on the information, we have to give the treatment for goodwill. So today's session, we are going to see when goodwill is valued. I told you whenever goodwill is valued, simple, it should be distributed among old partners and accordingly that goodwill will show in the balance sheet. So, hope you all have your textbook with you. So, let us come to page number 247 and problem number 11 I am going to discuss with you today. I'll show you the postings in the same pattern. You can see I have kept the accounts ready for you. So, Vani and Sharda are sharing profit and losses equally. Equally in the sense 1:1 ratio. And their balance sheet is given to us. Liability side, if you see, bills payable, bank overdraft, rent payable, creditors and capitals. What we are seeing? We are seeing that there is no accumulated profit. That's the reason I have escaped. I have not done with the accumulated profit account. Then asset side, cash, bank. Both are given here. Cash as well as bank. So cash will take in cash account and bank will take directly in the balance sheet. Then debtors, stock, machine and building. These are the assets and liabilities. Now, better hold the pencil everyone so that you can mark the adjustments wherever I say. Then, Neerja was admitted as a new partner on following conditions. Neerja should bring 50,000 as capital. We all know how to do the capital. Now you see the second adjustment. They say goodwill of business valued at 40,000. Underline the word 40,000 here. They are telling goodwill is valued. What are the different words I told? Valued, raised, created. So goodwill is valued. Put star mark over there. Then, very interesting one. Stock is revalued at 58,000. So we'll mark adjustment on stock. They gave you the value 58,000 and building at 40,000. We'll see what happened to stock and what happened to building. Then creditors are increased by 3,000. So we'll mark adjustment on creditors also. There is adjustment on creditors. Then journal entries and all, of course they won't ask, they'll ask you to do the account. So the structure of accounts, if you see, cash account, goodwill account, revaluation account, partners capital account and the balance sheet. They are ready with me. Now we'll start with the posting. Now, Vani and Sharda are sharing profit and losses equally, they told. So better for our convenience, we'll write Vani, Sharda. 1:1. Now let us see for the posting. What they said, the first thing will start with liability. So what is the first liability given? Bills payable. Already our structure is ready. Just go and fill it up. So bills payable as it is in the liability. Bills payable 15,000. Followed by bank overdraft. Bank overdraft is also a liability. So as it is posted without any difficulty. Bank overdraft 25,000. Then rent payable. Nothing but outstanding rent it is. So rent payable we are posting liability of 10,000. Then creditors. We are writing creditors. But we are not going to write in the amount column because it has an adjustment. So I am writing in inner column. Then capital. So I'll go to partners capital, credit side, by balance brought down. Vani's capital is 60,000. Sharada's capital is also 60,000. So all our liabilities are posted. Now asset. Cash. We'll come to cash account. Bring down the balance on debit side. To balance brought down 8,000. Cash is 8,000. Then bank. So as it is bank, asset side 12,000. Followed by debtors. No adjustment on debtors. So debtors, inner column no need. We'll write in outer column 30,000. Then stock. It has an adjustment. So stock amounts to 60,000. I wrote in inner column dear. Then machinery. Leaving some gap. I am writing machinery. No adjustment on machinery also. So machinery, I'll post 50,000. Then building. Followed by building. Building has a value of 30,000. Like that, in a very systematic manner, first try to post the assets and liabilities to the respective position here. It's always good open the accounts and then do the postings. Once your postings are over, you can start doing the adjustments. What does the adjustment say? Neeraja should bring 50,000 as capital. So again, you can form the journal entry in the mind. Cash account debit to Neeraja capital. So effect. Cash account debit side to Neeraja capital. Debit what comes in. So capital came. So 50,000. Second effect. Neeraja is credited. So Neeraja, that is partners capital, credit side by cash 50,000. Again, cash to capital. So cash account debit side, same partners account credit side. Like that double effect should be given. Then goodwill of business is valued 40,000. Be careful. Valued. Whenever they say valued, I told you it should be distributed among partners. So we'll go to working note and we'll write here goodwill valued. What are the different names I taught here? I am writing here created, or they can say raised. Since they told valued, how much they valued? They said goodwill valued 40,000. So what will I do again? This 40,000 I am going to divide by 1:1 means 2. 2 2s are 4. 1, 2, 3, 4. I am transferring. So 20,000 here. Now I'll see the share of Vani. Vani 20,000 into 1 is 20,000. Then Sharda again 20,000 into 1 is 20,000. So we have valued the goodwill. When goodwill is valued, what is the journal entry I taught you? I said goodwill account debit to partners capital. Goodwill account debit to partners capital. So we'll go to goodwill account debit side to Vani capital to Sharda capital. Since they are equal partners, both are getting 20,000 each. So goodwill to Vani to Sharda. Be careful. Don't do anything on the credit side now. It is valued. So we'll go to good partners capital by goodwill. Each is getting 20,000 here. Again, I am repeating, goodwill is valued. Journal entry is goodwill account debit to partners capital. So goodwill is debited, partners are credited. Then, so far in the last sessions we saw they gave depreciation 5%, 10% like that. Now if you see here, they gave you stock is revalued at 50,000. 58,000 they said. They gave the amount revalued at 58,000. Means today's value is how much dear? 58,000. Now we'll compare. What was the stock value given in the balance sheet? 60,000. And what is today's value? It is 58,000. So what happened to stock? Stock has decreased by 2,000. 60,000. Say it came to 58,000. So reduced by 2,000. So stock, I told you already, we'll write the word written off. Better. Written off. 2,000. Since 2,000 has decreased, 58,000. Now this 2,000 will be going to revaluation account. To stock, 2,000. Hope you all have understood. They gave you 58,000 new value. Balance sheet value was 60. So 60 minus 58, 2,000 decreased. Like that, if you see, they say building is valued at 40,000. How much they gave us building value? 30,000. And today's value is 40,000. So what happened to building? The value of building has increased. Nothing but appreciated. How much? From 30, it has increased to 40. So 10,000 increased. So we'll go to building, add appreciation 10,000. And the building value is 40. Now this 10,000 will go to revaluation credit side. You know the entry. Building account debit to revaluation. So revaluation is credited. We credited building. Revaluation account with building. Now let us see the next adjustment. They say creditors are increased by 3,000. Creditors are increasing. In the sense, liability is increasing. One liability called creditor. How much are creditors? 20,000. Increased by, they told. By means 3,000 should be added. So we'll go to creditors, add increased. How much they are increased? It has increased by 3,000. So 23. When liability increases, the journal entry says revaluation account debit to liability account. What is the liability? Creditors. So revaluation account debit to creditors. How much dear? 3,000. Like this, all the postings are done. All the postings are done. Again, if you see, capital was brought by Nirja. Cash to capital we wrote. Second effect we gave in partners capital. Then they said goodwill valued. Very clearly we did working 40,000 and we have distributed among old partners. Entry was, I told you, goodwill account debit to old partners. So distributed, one effect. Second we gave to partners by goodwill. Then we did revaluation entries. Same procedure we are following. Now we'll start closing the accounts. All the postings are done. So 1111 account we are going to balance. Now if you see cash account, it's very easy. Nothing is there on credit side. 50 plus 8, 58. So directly you can close the cash account by writing here the new balance of cash as by balance carried down. How much is the cash? 58,000. You can close here with 58,000. 58. Cash shows debit balance. You know the rule of real account. So to balance brought down 58,000. Cash is an asset. So we came to asset and new balance we wrote 58,000 here. Now comes the theme of the problem, goodwill. What they said? Goodwill is valued, they told. Goodwill is valued. In the sense, only we have distributed goodwill. I told you two effects. One, we have to distribute among partners. We have distributed. Then what about the second effect? We have to balance the goodwill account. Being an intangible asset, even this is going to show you the debit balance. So we'll balance goodwill account very carefully by balance carried down. 20 and 20, 40,000 was the goodwill valued, close. 40,000 closed. So this 40,000 I'll bring down here better. Then I'll post it to balance sheet. Goodwill is an intangible asset. Real account, intangible asset account. Thereby, I'll put in the balance sheet asset side. So, here goodwill is 40,000. Goodwill 40,000 here. Goodwill is over. Then revaluation. You know, again we have to do debit credit of revaluation to get what ma? To get profit or loss. So we'll do the working. Revaluation. I am writing debit side, credit side. Debit figures 2,000, 3,000 gives me 5,000. Credit 10,000. Again, credit is more. Credit minus debit 5,000. I get a profit of 5,000. This is my profit. Now this profit I am going to distribute among who? As usual, Vani and Sharada. So better 5,000. I'll find the quotient. 5,000 divided by 2. I'm going to divide by 2 dear. So 2 2s are 4. Better. 5 minus 4, 1. This 0 we are bringing down. 2 5s are 10. 0. 1 2. 1 2. 2,500 is the quotient. 2,500 is the quotient. Now we'll do Vani's share. Vani 2,500 into 1. 2,500. Sharada 2,500 into 1, 2,500. So, each got 2,500. So, we'll post it. To revaluation account debit to partners. So, to Vani capital, to Sharda capital. Each is getting 2,500, 2,500. Revaluation is closed with 10,000. Now, entry, we said revaluation to partners. So, we gave to partners. Now, we'll come to partners account, credit side, by revaluation. How much they are getting? Each is getting 2,500, 2,500. So, cash account is balanced, goodwill is balanced, revaluation is closed. Now, comes the time to do the partner's capital account. So again, better is doing the working so that there won't be any confusion. Who is the first partner? Vani. Again, I'll write her credit figures. 60,000, 20,000, 2,500. 82,500 is her credit. Is there anything on debit here? Nothing is there on debit. So debit is 0. So new balance is also same. 82,500 balance. Similarly, I'll do for Sharda. No doubt same will get, but better. 60,000, 20,000, 2,500. Again 82,500. Credit, debit is nothing. Again I get balance 82,500. The new partner Neeraja. How much? 50,000. So total is 50. Debit nothing. 50. So these are the new balance of the capital of each partner. So first we'll post them here. To balance carried down. What is the new capital of Vani? 82,500. Here also Sharada same, and Neeraja she brought 50,000. Close the partner's capital. I am not closing in the end, dear, you can see, because I'll bring down the balance. What is the total? 82,500, 82,500 and 50,000. Here also 82,500 and 50,000. Better, we'll bring down the balance by balance. 82,500, 82,500 and 50,000. This is the new partners cap. This is the new capital of the partners. So we'll come to balance sheet. First is Vani capital. How much is Vani's capital? 82,500. Second partner Sharda 82,500 and new partner Neeraja 50,000. So if you see, at the beginning Vani's capital was 60,000. Now it is 82,500. Again Sharada's 82,500. So what happened to capitals? They are increasing. Like that, we see in the admission that the composition of partners, it changes. The amount of capital, it changes. Thereby, we reconstitute the firm. So here we have reconstituted the firm. Now, we have to do the last part, which is the blood of the problem we can tell. Okay. If the balance sheet tallies, you will be the happiest person and you will get 20 out of 20. If you solve this way, dear, I'm telling you, when you see two balance brought down, generally no student will write. But when you write, the examiner will have a good impression on you that you have the subject knowledge. Like that, whenever you do cash account, bring the balance here. Like that, when you do partner's capital, after closing, bring down the balance. These are the things which are important and essential to get 20 out of 20 marks. So now, balance sheet. 101% your balance sheet will tally. That is guaranteed for you because you have done all the postings correctly. So let us see now. Liability side. Figures. Maintain the dignity. 15,000, 25,000, then 10,000, 23,000. Please don't write the figures here and there. Maintain the discipline of decimals and let us jot the figures. 82,500 and 50,000. 0, 0. Now see. 5, 5, 10, 0, carried 1. 5, 10, 11. 11 plus 3, 14. 14 plus 2, 16 plus 2, 18. 8, 1 carried. 6, 6 plus 8, 13, 6 plus 8, 14, 14 plus 8, 22, 23, 24, 25, 26, 27, 28. Again cross check. 3, 4, 5, 6, 6 and 16, 22, 22 plus 5, 27, 28. Again you can cross check. No issues at all. 2, 3 times you cross check. You can take again. 8, 8, 16 plus 5, 21, 22, 23, 24, 25, 26, 27, 28. So 2,88,000. Now in the same way, we should get asset side also. Hope we'll get asset side also. So 12,000, 30,000, 58,000, then 50,000, 40,000, again 58,000 and 40,000. Let us see. All is well. Let us see. 8, 16, 17, 18. 8, 1 carried. 10, 14, 19, 20, 20, 28. Like that, 101% your balance sheet will tally. 2,88,000. So write the balance sheet total. 88,000. So 2,88,000. Like this, we have done all the 3 important cases of goodwill here. Okay. Please do not do the working notes here and there. Try to do along with the solution so that you will be able to post them properly and you will be able to know your answer correctly also. So this is the pattern of your goodwill. What are the different patterns we have learned? One, we saw goodwill is brought in cash. Then second, brought and withdrawn. And third, I have shown you goodwill is valued. Now, in the last session, I'll show you the last part of the goodwill, that is goodwill is valued and it is written off. Okay. If you remember, I taught you intangible asset accounting standard 26. That we'll see in the next session here. Have a nice day. Practice few more problems and see the solution and work out as much as possible. Thank you. Stay safe. Stay at home. God bless you all.